Welcome back to Investing Talk Podcast.
Today we're looking at Robinhood markets.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Great. I feel like for years, the big question with Robinhood was always, okay, they can get users, but can they actually make money?
Right. That was the whole skeptical take.
Yeah.
That they were great at acquisition, but maybe not so great at turning that into, consistent profit.
And that argument is, what, basically dead now?
I'd say it's obsolete, yeah.
Yeah.
The whole story has shifted. We've moved past just growth. Now it's a profitable growth story. We're finally seeing some incredible operating leverage.
Okay, so operating leverage, that's a term we hear a lot. Can you break that down for us? What does that actually look like for a company like Robinhood? And how did Q3 really prove that point?
It's a great question. Think of it like this. They built this huge, expensive digital highway. That's the app, the developers, the compliance. That's their fixed cost.
Right. That doesn't change much day to day.
Exactly. So operating leverage kicks in when every new car on that highway or every new transaction costs them almost nothing extra. All that new revenue just drops straight down to the bottom line. It becomes pure profit.
And Q3 was the moment that became obvious.
Undeniably. Revenue hit, what was it, $1.27 billion. That's basically 100% growth year over year.
100%. Wow.
That's not even the real story. The real story was the earnings surprise.
Yeah, that was huge. I think consensus was looking for something like 41 cents a share?
Correct. And they just crushed it. They came in at $0.61.
61 cents.
Yeah. And that big beat, that surprise, is the proof. It's tangible evidence that the leverage is working. Their margins are expanding like crazy.
So it's not just that they're making more money, it's that they're keeping a much bigger slice of every dollar that comes in.
Precisely. The conversation has totally shifted from what if they grow to how much profit can they actually sustain? And that's where their balance sheet comes in,
Right.
which is, it's a fortress.
It really is. What, $4.2 billion in cash as of last quarter and zero traditional debt.
Zero. That's not just for safety,
Yeah.
It gives them incredible strategic flexibility.
So let me play devil's advocate. Does having all that cash, $4+ billion just sitting there, does that mean they don't have enough good ideas to invest it in? Or is it purely a defensive move?
It's a bit of both, but I'd say it's mostly about strategy. It's a buffer for sure against the volatility of their business, which we can get into. But it's also ammunition.
Ammunition for what?
For M&A, for
Yeah.
acquisitions,
Yeah.
which is exactly what we saw them do this year. It means they can move fast without needing to go to the markets for money.
And all while their platform is still growing like a weed, assets hit $279 billion, right?
Yeah.
Basically doubled in a year.
Yeah, and that's a massive lever in itself.
Yeah.
All those assets, even the cash just sitting in accounts, feeds their business model. It strengthens their position, and it directly boosts their net interest income.
Okay, good transition. Let's talk about their competitive moat. With that much scale and all that cash, how are they actually using it to stay ahead?
Well, their original edge was just making investing easy, right? The mobile app.
Democratizing finance.
Their edge now is much more layered. They're still the leader for new retail investors, but they're also expanding their product line way beyond just stocks. We're talking options, crypto, and they're even looking at things like, tokenization.
And the acquisitions in 2025 were a huge part of that moat building, I assume?
Absolutely. Two really smart, really telling buys. First was Trade PMR for about $175 million.
What does that do for them?
That's their move-up market.
All right.
Trade PMR is all about wealth management tech for, more serious investors and advisors. It's them saying, we're not just for beginners anymore.
It adds a layer of sophistication.
It does. And then the second one, Bitstamp, for around $224 million. That feels like their ticket to go global.
How so?
It's transformative. It massively expands what they can do in crypto, but the key thing is the licenses. Bitstamp is already regulated and operating in a bunch of international markets.
Ah, so it's a shortcut.
It's a huge shortcut. It's what you'd call regulatory arbitrage. Instead of spending years fighting with regulators in every single country, they just bought a company that's already done all the hard work.
That is smart.
It gets them a global footprint basically overnight. And you can see from the CEO's comments, he's thinking about this as building infrastructure, not just adding features.
Right. He was talking about tokenization being this massive innovation.
Exactly. He's positioning them as the first mover. They want to build the rails for the future of finance, not just be another app running on the old system.
And a big part of that has to be making sure their current users stick around. That's where Robinhood Gold comes in, right?
For sure. Gold subscribers hit a record 3.5 million. That's up, what, 76% year over year?
And why is that so important?
Because those users are stickier, they have higher balances, they use more features, and they are way less likely to leave. It creates this predictable, recurring revenue stream that kind of smooths out the bumps from their main business.
Okay, let's talk about those bumps, the elephant in the room. This profitability is amazing, but it's built on some really volatile stuff, isn't it?
It is. Transaction revenue is still the main engine, about $730 million in Q3. And if you break that down,
It's mostly options and crypto.
it is. Options trading was the biggest piece at $304 million, and crypto was right behind at $268 million. So yes, their fortunes are still very tied to retail risk appetite.
Which can disappear in a heartbeat if the market turns.
We've seen it happen. Just look at their crypto revenue. It surged near the end of 2024, then fell by more than half by the middle of 2025, and then it bounced back again. It's just inherently cyclical.
So given that volatility, what's the counterbalance? How are they diversifying away from just pure trading volume?
This is where that net interest income, or NII, becomes so critical.
That's the money they make on customer cash that's just sitting there, right?
Exactly. It's the banking side of their business, but without the risk of a loan book. They sweep that idle cash into interest-bearing accounts and pocket the difference.
And that segment's growing fast.
It's accelerating. And it's a beautiful natural hedge. Think about it. If the Fed starts cutting rates, NII might go down a bit. But what happens when rates get cut?
Volatility. People start trading more to catch the swings.
Precisely. Trading revenue tends to go up when NII might be going down. It creates a really important balance in their model.
Makes the whole thing more robust. Okay, let's pivot to the stock itself, the technicals. Where does it stand right now for someone watching the chart?
The momentum is undeniably strong. The stock has had an incredible run. It's up 4x from its 52-week low.
Wow.
And it's consistently trading above its key moving averages, the 50-day and the 200-day. That's a classic sign of accumulation. The market is bullish.
Are there any key price levels people should be watching for a breakout or a pullback?
Yeah, it's in a pretty clear channel right now. You've got major support around the $110 mark. If it breaks below that, you might question the momentum.
And the ceiling?
Resistance is sitting right around $145. I think a strong Q4 earnings report is probably the catalyst it needs to punch through that level for good.
We're also seeing more big institutions getting interested. Firms like Nordea, Ritholtz Wealth Management, they've been buying in.
That's a very powerful signal. When you see that kind of quiet accumulation from professional money managers, it means the narrative is shifting. They're starting to see it not as a spec stock, but as a structurally profitable company.
But at the same time, we have to talk about the insider selling we saw recently. That tends to scare people.
It does. And we did see some significant sales from senior execs in November.
Yeah.
That always creates some negative pressure.
So how should we interpret that? Is it a bad sign?
You have to look at the context. Almost all of those sales were done under prearranged plans. They're called 10b5-1 plans.
Right. Can you just quickly explain what that means?
Sure. It's basically a schedule. An executive sets it up months in advance, saying, I'm going to automatically sell X number of shares at this time or this price. It's done when they don't have any insider information.
So it's for personal liquidity, like diversifying or buying a house, not because they think the stock is about to tank.
Exactly. It's not a vote of no confidence. It's just executives cashing in some of their chips after a massive run-up in the price. It's pretty standard stuff, actually.
Okay, that's helpful context. Looking ahead, then, what are the big catalysts on the horizon? What should we be watching over the next, say, 3 months?
The single most important event is their Q4 earnings report. That's coming in early February.
The next big test.
It is. The market will be watching to see if Q3 was a fluke, driven by a crypto rally, or if this high-margin profitability is really sustainable, and they'll want to see how the Bitstamp integration is going.
And outside of their own earnings, there are market-wide events, too.
For sure. You have ETF rebalancing at the end of the year. If Robinhood gets added to any major indexes, that forces a lot of funds to buy the stock. Then in a couple of months, we'll get the 13F filings, and we'll see which other big hedge funds have been buying in.
What about the more speculative stuff? Any interesting rumors floating around that could be an upside surprise?
The chatter seems to be around three main areas. First, a faster-than-expected international rollout using those Bitstamp licenses.
Which would open up a massive new user base.
Huge. Second, there's talk about them launching some kind of advanced AI-driven investment tool in the new year. And third, the persistent rumor of a big partnership with a major bank for cash management.
All of which would be pretty significant catalysts.
They'd be huge. They're speculative for now, but they all fit perfectly with the strategic moves they've been making.
Okay, so to wrap it all up for our listener, what's the final take here?
The takeaway is that this isn't the old, risky Robinhood story anymore. It seems to be fundamentally positioned for more outperformance. You have this powerful combination of high margin profit, strong cash flow, and really smart acquisitions that are widening their moat. The operating leverage is real, and it's turning that top-line growth into even faster bottom-line growth. The outlook looks strong.
So the question now isn't just how fast they can grow, but whether their first mover advantage in new assets like tokenization and prediction markets will permanently redefine the retail investing landscape.
That's the billion-dollar question.
If you want more insights into high growth stocks like this, be sure to subscribe to the podcast.